This is The Bottom Line. The Bottom Line on 938 Live.
Data released by Singapore's Urban Redevelopment Authority shows no signs of the local property market picking up. This as prices of non-landed private homes slid 1.1% in the second quarter of this year. It's been 3 consecutive quarters of decline. Compared to Singapore, how are other property markets in the region faring? Gwendolyn Goh tells us.
Like Singapore, the Hong Kong government has introduced several policy measures to curb rising home prices since 2012. These include a 15% property tax on foreign buyers, added stamp duties on buyers who buy and sell properties in quick succession, and a doubling of sales tax on all properties costing more than 2 million Hong Kong dollars, with exemptions for certain groups of buyers. In 2008, its property prices more than doubled after quantitative easing was introduced in the US, to which the Hong Kong dollar is pegged. However, after the government introduced the tax rise on apartments costing more than 2 million Hong Kong dollars in February last year, its property market saw a 17-year low record as the number of properties sold declined by more than 30% last year. According to Barclays, home prices in the territory rose just 2.8% last year, and that's a significant decline from the rise of 21.3% in 2012. Research head of Hong Kong's DBS Vickers, Carol Wu, says current prices in the primary market have gone down by 10 to 15% as developers reduce prices to move units.
Going forward with the tightening measures still in place, plus a potential interest rate hike, we actually expect price to fall by 5% every year over the next 2 to 3 years.
An additional factor in which Ms. Wu attributes her forecast is the ramp-up in housing supply that Hong Kong will have by the end of 2017. She also notes that the property market is seeing a slowdown in interest of buyers from China.
Well, mainland Chinese is still an important player, but the importance has dropped quite a lot. If you look at the data, in 2011, mainland home buyers account for around 35% of total property transaction in primary market, but the ratio has dropped to around 17% currently.
While in Tokyo, property prices have gone up. Director at Singapore Sumitomo Realty, Shintaro Hayashi, says there are several factors for the increase. And that's besides the effect of Abenomics, which is the term commonly referred to by analysts on Prime Minister Shinzo Abe's stimulus policies to rejuvenate the Japanese economy.
One is construction costs. So definitely going up due to the reconstruction work in the Tohoku area and the demand for the infrastructure of Tokyo 2020 Olympics. Secondly, as the population concentration of Tokyo continue to increase despite overall decrease in Japan. Finally, Tokyo continues to be one of the world's largest city in terms of GDP compared to other cities.
Many analysts say Japan's successful bid for hosting the Olympics in 2020 has inadvertently pushed Tokyo's property prices up. And that's exactly why Mr. Hayashi expects prices to continue rising till 2020. Back home, prices of new homes will continue to slide. Jones Lang LaSalle's head of Asia-Pacific capital markets, Stuart Crow, says the current government policy measures have had a significant impact, especially the total debt servicing ratio, or TDSR, introduced in June last year.
The debt service ratio is really a defining moment for the market, and we've seen transaction volumes, which are a key indicator of price, increase or decrease, down 55% since June last year.
And he says the supply pipeline will cause prices to decline further.
Supply remains and supply is coming. Best guess, I think, developer sales this year in the private end of the market will be around about 9,000, maybe 10,000 units. Supply still at 19,000 this year, probably around 24,000 next year. So inevitably, supply and demand, that metric will win out and prices will continue to come down.
As to which alternative locations are ideal for investors looking outside of Singapore, Mr. Crow has his eyes set on the Philippines. He attributes his choice to the rise in its middle-class population and low per square foot prices.